Good morning, ladies and gentlemen, and welcome to the show this Tuesday, the 7th of December, 2021. Thank you for tuning in. I'm glad to have you guys here. Now, I was making a prediction the last couple shows, the last two shows, making a prediction. And in my prediction, I was talking about a slowdown, a massive slowdown that's coming to the economy, and also new rounds of stimulus, which is going to push us over the edge toward inflation. And it's the second wave and third waves of inflation are going to be worse. Inflation's just going to get worse and worse and worse at this point. There's no turning back pretty much now. I know I said till March that we could have a deflationary shock to the system and some sort of a crash. But there's been new developments that make it look more like it's going to be inflation all the way. And, I'm telling you guys what, the central banks are going to turn around and turn on their heels pretty soon because there's something really big coming this way. I was doing some calculations on this, what's really big that's coming this way. And I was basing my calculations off of roughly times 2, 72 hours. Well, I'm getting new information this morning, and it's looking more like instead of times 2 times 2, 72 hours, it's looking more like it's times 2, could be as possibly as low as 24 hours to 36 hours, more likely in around 36 to 48. It's less than, it looks like it's less than 72. So I have to recalculate my position on these last two shows that I've done for you guys. And it's looking more like it's going to be coming in January or February instead of March. This is all going to happen very quickly from this point forward. Very, very quickly. And, it's going to be a little bit of a shock to the system to you guys. I would suggest, now I'm just going to tell you what I'm doing. This afternoon I'm going to go to Walmart. And I'm going to get a nice big shopping cart. And I'm going to go down the grocery aisle, and I'm going to pick out some things that I need, like, I like the canned chili, you put it in the pot. I like that. I might get some of that. I might get myself some cans of beans, cans of sardines, I think, this afternoon. And I might get a few cans of corned beef, maybe a couple cans of Spam. I might stock up on a little bit of pasta and pasta sauce. Anyway, I'm just going to go grocery shopping this afternoon, up and down the aisles in Walmart, and get in and out of Walmart, wear my mask, which is the thing, wear my mask through the store, and because, well, I'm going to tell you guys, what a time we've had the last couple of years. To be honest, what a time we've had. And, it's the old saying is it's not over until the fat lady sings, Well, I think the fat lady is out in the back room out there, and she's practicing, getting ready to practice her singing, you know what I mean? Anyway, so we're moving into very strange times indeed. But there's an old saying, guys, and I want you to remember this, that it's always darkest before the dawn. It's always darkest before the dawn. And every cloud has a silver lining. These are old sayings, but they're very true. I know you guys been through an awful lot, but I also think that there is a time coming, probably this summer or this fall, when things are going to be much better in a way than they are now, Anyway, let's move on with the show, and let's get right in there and take a look, and let's open up the charts right here. We're going to take a look at Evergrande. Now, this timing of all this, the Evergrande situation, and it's spread. It's not just Evergrande. It's a whole bunch of property developers in China. It's the time for this is coming just about the same time we're going to run into these other problems smack in the face too, you know. And what this points to me, it points to me massive stimulus measures coming. This is what I think is coming. I don't think it's going to be stimulus on the level that we saw before. I think it's going to be bigger this time. I think it's going to have to be bigger because of the situation that's evolving right now. And what this basically means, guys, is things that have been going down lately, like cryptocurrencies, gold, silver, the market's just been hanging on, things like that. What this means is a reversal. What this means is, instead of being over, this is my take on it anyway. Instead of all these rallies being over and us being in a bubble that's ready to pop, it's going to reverse everything into we're on the ground floor, ready to go up on everything, just about everything. The price of used cars, anything you buy from China gonna go up. Food, oh my goodness, you know, price gonna go up. Everything that you look at is gonna go up. So, you know, you could make money right now just buying some cans of canned beans, for crying out loud. If you're a retailer ready to sell those canned beans, like in a few months from now, you probably double your money. I mean, it's just like everything's going to go up. Maybe they'll be able to keep the price of gold and silver suppressed a bit longer, but they're going to run out of inventory, is what's going to happen. And to me, that's a no-brainer. As the price of inflation goes up and as people are looking for a hedge, they're going to seize onto these cheap precious metals. And they're cheap right now, let me tell you. And they could get a little bit cheaper. But they're going to seize on them at a certain point. And they're going to take the physical, and they're going to take possession. It's going to disappear. Anyway, we're getting back to talking about this Evergrande, you know. They didn't get their coupon payments for Evergrande after the 30-day grace period. It says this is pushing the cash-strapped property developer closer to a formal default. Failure to make $82.5 million in interest payments that were due last month trigger cross-default on the firm's roughly $19 billion of international bonds. And it puts the developer at risk of becoming China's biggest ever defaulter. So we got that going on right now. Now this is a cascade of events, a cascade of effects. These property developers go down, what happens? Well, properties come on the market. At fire sale prices. Next thing you know, the bubble's bursting on the Chinese real estate market. That's what could happen next. That's what could very well happen next. We'll have to wait and see, but I see a big finger pointing in a certain direction here to the whole world economy. Because the timing of all this, well, we know what I was talking about, what's probably coming now. I'm thinking January and February. I'm thinking it's coming sooner. I was telling you guys yesterday, just yesterday, I was telling you guys March. Now I'm saying January or February, guys. I'm changing it. I have to change things. It wouldn't be honest to you guys if I got new data coming in, and that data points to a little bit to something different than I said yesterday. I have to go with the new data. I just can't ignore the new data and say, okay, I'm just going to continue with because I might lose a few viewers because the next day I come in with a little bit different report and they say, well, you said this yesterday, and then I'm saying something totally different the next day. That affects my credibility. But on the other side of that, I'm not going to keep that new data out of the equation. I'm going to give it to you guys straight. New data suggests that this thing is coming in sooner. This whole malaise with the economy. I'm talking about malaise. I'm talking about there's going to be a continuing of this slowing that we're seeing. And yes, it could drive things lower, like gold, silver, cryptos. But this is all going to turn around in a heartbeat once they're forced back to stimulus measures again. And is it going to turn around big? So this is creating, as these days progress, with these prices being suppressed on the metals and suppressed on cryptos and everything else, creating buying opportunities. Because on the other side of this is all going to explode to the upside. So anyway, we see Evergrande's in trouble. What's silver doing today? It's dipsy doodling. It's at 22.40. You know, we just had a dipsy doodle down, dipsy doodle back up. 22.40. It's up 2 cents on the day overall, which is nothing for the upside compared to what the upside could be, the upside potential. $1.90 on gold, 17.80, and it did a dipsy doodle too. Dipsy doodle too. We're going to take a look now at cryptos, and what we're looking at is, now I got to refresh the page to tell which way it's moving. It's 23.76 right now, 23.81, so it's moving up. We're looking at Bitcoin at 51,309. It took an awful beating. The cryptos have taken an awful beating there in the last week or two. Okay, so, but, you know, the beating is... well, we're going to have to wait and see if the beating's over. But like I say, things are going to remain toward that side. That negative bearish side is going to remain until the switch is flipped. Oh, I don't know. I'm just going to guess. It's going to be somewhere, you know, where they start to get pushed up hard against the wall, the Fed and Reserve and all these other central banks, and they see their system starting to slip. That's when they're going to step in and they're going to prop it up. It's going to take a lot of money this time. A lot. More money than you can imagine. In the form of stimulus. We're probably going to have to do fiscal stimulus again. Instead of just monetary policy. This is big. This is really big, guys, because the system can't take that without going into hyperinflation now at this point. But they're going to have to do it. There's no other choice. Take a look at the Dow Jones today, and we're up 319 points at 35,531. Let's take a look at oil. We see oil price heading back up too. It's up $2 today to 71.50. Let's take a look at the MOVE index, and it is shooting upwards too. Take a look over. It's almost back up to 90 again. We've seen a quite a little jump in the MOVE index, and it's going up quick. That MOVE index indicates in the credit markets whether there's stability. A higher number is bad. That means instability in the credit markets. The number's moving up right now, and it's getting up pretty darn high. Let's take a look now at bonds and rates. And we're looking at rising yields today. U.S. 10-year, 1.45, U.S. 30-year at 1.77. That's the effects of the U.S. Treasury notes. These are historically low yields. 10-year at 1.45, it's below 1.5%. And the U.S. 30-year at 1.77. And we got an inversion between the 20 and 30-year. Now, let's take a look at the U.S. dollar index, and the dollar index is rising today, and, you know, it's not a surprise to me. Thank you guys for listening to the show. Like and subscribe, and we'll catch you guys in the very next episode. Bye-bye.